Hello, my name is Evan, and thank you for tuning in to Economics 101, your number one source for everything economics. If you feel like rent is out of control and buying a house feels impossible, you're not crazy. Because here in 2026, housing is still one of the most expensive parts of life for a lot of people. It's actually worse than it was a few years ago. So, what's really going on? In today's video, we're going to break down why mortgage rates are still painfully high, while rent hasn't come down the way people expected, and the hidden forces keeping housing expensive. And trust me, once you see the full picture, it starts to make a lot more sense. Before we jump into the video, I do have a quick favor that it really helps grow the channel. If you find value in simple, non-fluff explanations of the economy, consider hitting the like button and subscribing. It helps more people understand what's really happening within the economy. So let's talk about mortgage rates. Okay, that's the biggest factor. Uh, we'll start with mortgage rates. Back in 2021, you get a mortgage rate for around 3%. Fast forward in 2026, the rates are hovering 6% to 7%. Right? That might not sound like a huge difference, but financially, it is massive. So let's just take a $400,000 home. 3%, you're gonna be paying about $1,700 a month. 7%, you're gonna be paying about $2,600 a month. That's almost $1,000 difference. Excuse me. Yeah, that's almost $1,000 difference. Um, so here's the key, and here's the key. This isn't just random. It's difficult. It's directly tied to the Federal Reserve raising interest rates to fight inflation. Okay, higher rates equal more expensive borrowing. Higher mortgage payment. Excuse me. Higher rates equals more expensive borrowing, which equals higher mortgage payments. Okay, so even if home prices stop rising, monthly costs still explode. Okay, you may have heard something called the lock-in effect. Okay, and here's where things get a little interesting, I guess. Millions of homeowners locked in on a ultra low rate during like 2020, 2019 to 2021, like super low. So what are they doing now? Okay, they're not gonna sell. That's what they're doing. Because if they move, they go from a 3% mortgage to a 6 or 7% mortgage. So basically, if I'm locked in on my 3% mortgage, I'm never gonna leave. I'm never gonna sell that to go into a larger mortgage. Of course, some people will, but the majority of people are gonna lock into that. So, and that's what economists call the lock-in effect, and it's crushing housing supply. Fewer homes for sale, higher prices equals higher prices. So even though demand cooled, supply dropped too, and that keeps prices stubbornly high. Okay, why is rent still high? Okay, now you might think, okay, buying is expensive, but rent should come down, right? No, not at all, not exactly. Here's why rent is still elevated. First, when people can't afford to buy, they rent. It's simple. Well, typically that's what they do. That increases demand in the rental market. Second, landlords also face higher costs. Okay, higher interest rates on property loans, higher insurance premiums, higher property taxes. So everything from a landlord's perspective is also going up. So what are they going to do? That's right. They're going to pass it along to the renters. All right. They just pass these costs to the renters. Okay. And third, housing supply is still behind. The U.S. is estimated to be short millions of housing units. So even with slower inflation, rent's not going to drop. All right. It just rises more slowly. So that's what you're going to see. And this, of course, is regional. Some areas you may have a drop, but in the majority, it's just going to rise slower. All right. So supply crisis. Let's talk about the supply crisis that we have. It didn't start in 2026. It's been building for decades. After 2008 housing crash, construction slowed a lot. Okay, builders became cautious, financing tight, and we never fully caught back up as far as the supply or how many units were available. Now, fast forward, and we have population growth. You got more household formation. You got migration to cities and suburbs, uh, but not enough homes being built. That imbalance is a core issue. That's the problem right there. That I talk about equilibrium in previous videos. That imbalance is our major issue. Too many people, not enough housing. And until that changes, prices are going to stay elevated. Quick pause, guys. If you want more breakdowns like this that actually explain what's going on in the economy without all the confusion and jargon, make sure you subscribe and stick around. That's exactly what this channel is built for, to help people understand economics in their day-to-day lives and what's going on with supply and demand and with the housing and rental market. So please stick around, drop a comment, like. Let's hop back into it. What's going to happen next? Where do we go from here, right? There are a few possible paths. Okay, let's talk about them. If the Fed cuts rates, mortgage rates are going to fall, more than likely. Mortgage rates are going to fall. Buying is going to become easier or less expensive. Demand will spike. If construction increases, supply improves. More houses out there. Prices may stabilize. But here's the catch. If rates drop too fast, housing prices could actually rise again because demand surges. So ironically, good news on rates might not mean cheaper housing. Okay? The most likely scenario, in my opinion, housing stays expensive, but grows more slowly. Okay? Um, not a crash. More on the lines of like it just balancing out. Okay, what does this mean for you? So what should you take away from all of this? First, high housing costs aren't random; they're structural. Second, interest rates matter more than home prices. And third, timing the housing market is extremely difficult. And don't do it. Instead, focus on what you can control. Okay, focus on being able to control your budget, being able to control your income, being able to control your long term plan, because the market doesn't need to be perfect for you to make a good decision. All right. Um, if this video helped you understand why rent and mortgages are still extremely high in 2026, please make sure you like the video and subscribe for more simple, real world economic breakdowns. And I would like to hear from you in the comments. Do you think housing prices will come down or stay high? What's happening in your area? Drop those thoughts in the comments below. This channel is all about making economics make sense in real world. Uh, no fluff, just clarity. And as always, this is Economics, your number one source for everything economics. I will see you on the next video. Thank you.